Guys, this is an update on Chainlink or LINK-USD, which has had a pretty big day today. You see a big green spike of a candle here on today, which is January 4th, and it stands out against the overall crypto space. We haven't seen as much bullish action there. So Chainlink is having its day. It's an interesting environment in which it seems like each day a different crypto has a nice explosive gain. So in our last update, we had quite a development. It was right after we had that big crash across the crypto sector. Everything got killed. We had a lot of invalidations happen. Some of the cryptos had lower lows since their midsummer lows, so they completely reset their patterns. But Chainlink, along with Stellar Lumens and Dash, is one of the cryptos that did not have that happen. We actually maintained a bullish setup, although it's not as pretty as it looked before. If you recall, I had a purple pattern that got invalidated. That has now been removed from this chart. Just to clarify things, the green pattern is our primary now. And what we have here is our this was our midsummer low, what we were calling the wave 2, major wave 2. And since then we had a 1, and then we looked like we had a 2 and then another nested 1, 2, but that broke lower than the origin of the smaller wave 1. So now we're looking at this as a 1, A, B, C for the wave 2. So it's an expanded flat wave 2. An expanded flat is a correction in which your B wave actually exceeds the previous peak. So I'm looking at this whole thing as a correction. This could be interpreted as maybe an A, B, and then a 1, 2, 3, 4, 5, which would be a pretty typical shape for a C wave in this case, or in this case, the B wave. In addition to that, we've retraced quite deeply. We have this purple box that was actually no longer relevant to this pattern, so you can ignore that for now. We actually do have some development here. Ever since our bottom, we are rallying to some extent. It's not the prettiest rally, but you can see that I've put some channel trend lines on here. These are the blue lines that you see as marked, and this would best be identified as a diagonal. So this would be a leading diagonal. In this case, you'd see a 1 wave here, a 2, both zigzags, then a 3rd wave, maybe an A, B, C kind of structure, 4th wave. And we should be concluding our 5th wave of this leading diagonal if this is really the formative pattern in operation. You can see on the MACD that we are a bit oversold. So this is almost textbook leading diagonal in which our 5th wave is going through what we call the overshoot, where it extends slightly above that trend line before snapping back. So we're waiting the snap back. I wouldn't be surprised because, again, we are up, 8.62% for the day. So wave 2s after leading diagonals retrace pretty deeply. So it might be an ugly day overnight into tomorrow if this is the case. But if we hold and it's a corrective bounce down, that gives us a pretty good pattern to continue our rallying structure. Now we do have a key support right below. Our low from earlier in December 3rd was 1667. That is the immediate support. We do not want to break that. And as I mentioned, this should be a pretty deep retrace considering that we are in the leading diagonal. If we break that, we could actually go a little lower without invalidating our bullish setup. But our bigger support down below is at 1355, which is the low from midsummer. That is where our major wave 2 was. If we break that, we are following our red pattern. So once again, if we break 1355, we go below that, we're very likely going down in our big red C wave, which I'm going to estimate somewhere around maybe $8. It's not totally clear where it'll fall. We'll take a closer look at that on the big picture momentarily. And of course, the red pattern would have this entire thing being a corrective fake out. So on our big picture, we can see that we have our green pattern. As I mentioned, purple pattern has been removed just to make things more clear. We have a major wave 1 top that happened in May. We have what I'm calling the major wave 2 that we just looked at on the closer picture right here in July. Again, this is the daily logarithmic chart, so things count a little differently. They look different. And we have our wave 1, and we've had our expanded flat wave 2 correction. I want to point out that our MACD spiked down pretty low during the A wave, but it got much lower in the wave 2. So this is just an indication that we were quite oversold, which is generally a good thing if you're trying to set up a rally. It's like coiling a spring before we can take off. So, of course, the alternate red pattern is that this was an A wave. The entire rally thus far has been a fake out B, and then your red C wave could take us somewhere, who knows, around $8, maybe less. It's not clear. The reason why it's tricky to calculate is because our peak was so high. You can't really use equivalents between the A wave and the C wave to get a good estimate on where the C wave could go. that would probably put us in negative territory, which isn't possible. So I'll leave it at that. 1355 is the major support. If we hold together, our targets are a little lower, as I mentioned in the last update, than before, just because we did retrace so deeply. Our standard third wave projection would be between $51 and $57. Those would be your standard projections, and expect a multi-month fourth wave. And our final fifth wave top would fall between $61 and $67. Getting to the bottom of that box would give us a 3x return from where we are right now. So those are the green boxes I just mentioned. There's a purple box that you'll see overhead. And the reason why that is there is that we could have some further extensions. Now, if we look at the history of this thing, you'll see that this entire thing is a wave one, and we retrace so deeply that there's no way this is anything but a wave two. I don't think this is a diagonal, because diagonals usually have deep retraces. This looks too much like a good impulsive setup. This looks like an impulse. So assuming that this is a wave two, our wave one should get between the 0.32 and 0.618 extensions of this larger pattern in our history. And that would put us between $33 and about $46. Well, guess what? We had our wave one peak hit just right inside that box. Our B wave went even higher than that. So we ticked that box. So that makes this convincingly a first wave. We're still valid on the wave two. If that holds, your third wave will typically fall between your 1.0 and 1.236 extension. So usually if you hit the 0.382 extension, you would expect the third wave to hit the 1.0. That's at $66. If you hit the 0.618, it would be at about $79, the 1.236 extension. Since we fell right in between, there's a good chance we get to the bottom of this purple box. And that is, again, just based on the fact that this larger pattern has a 1-2, and we're following Elliott Fibonacci pinball patterns. These are all standard patterns. So I would not be surprised at all if we get there. And if you didn't notice by now, I mentioned third wave. That would be the top of the bigger third wave. So you would expect a good correction. Things might fall off a cliff after that, but falling off a cliff in this case would be probably a descent from about $67, $68 down to whatever the standard support would be, somewhere between 46 and 53. So it wouldn't be the biggest crash. If you are a long-term investor in Chainlink, it may not be a bad idea to hold some of it, maybe unload some and rebuy at that level, something like that. I've mentioned in previous videos that Chainlink's pattern has a very good long-term outlook, because if that is the fourth wave, your fifth wave would fall somewhere in the 99 to 108 range, something like that. And those are actually the standard targets for the bigger wave three. So I actually need to change the nomenclature here just to reflect that. But point being that if we hold this together, Chainlink's looking pretty good overall. I didn't mention this earlier. You'll notice that I changed the labeling, the nomenclature for these numbers. These used to be parentheses I and parentheses II, the Roman numerals. I changed this because, again, Chainlink is following a slightly different pattern, where that was very likely the first wave. Makes it easier just to have these Arabic numerals here instead. I did the same thing here. So should have mentioned that before. Hopefully that keeps things clear. Hope didn't confuse anyone. Aside from that, though, we do have precedent for this happening in Chainlink. So if we look at the history, again, we took off parabolically in the past, nothing. Then we had some hyperextensions here. If you take if we take that Elliott wave tool and just draw out something based on this 1-2 here, like we spiked well past where your standard extensions would be, which would be around, $42, maybe $43, $47. We went to $55. And you could see there wasn't much action before we went up. This is shared. This is something that's shared amongst a lot of other cryptos, but Chainlink looks like it has one of the cleaner patterns within the crypto space. So we're going to see what happens. Let's see if that leading diagonal holds together. Expect a quick pullback. Could be nasty in the near future. If that happens, we should be well off into a third wave. And where that would put us really depends on the situation here. We might have a bigger wave one first. We might rocket right up. We'll see how it develops. If I see anything bearish, I'll definitely be posting about it. I'll be posting some educational content as well. So don't forget to subscribe if you want to get some of that. And if you enjoyed my video, don't forget to like. Until next time, thank you for watching and happy trading.